go, guys. I hope everyone has had a great week. So firstly, I just want to say how pleased I am with everyone's results for October. What an epic month we've all had. And, people are seriously leveling up, which is amazing to see. So well done to everyone. Amazing input, amazing results. And yeah, fantastic to see. So the first thing I like to do with a new month is check the monthly candle close. It's really the only time of the month that I bother looking at the monthly time frame, as we can gauge the strength or weakness of a pair going into a new month and just have that awareness of information in the back of our minds when trading in general. So, I encourage you guys just to check the monthly candles just to see how they've closed and just to have that information in the back of your minds. So, as I say, what a month October was. We saw some beautifully clean moves with lots of momentum and technicals really playing out, which is just great to see. So for those of you that have had a great month, now is the time to preserve your capital and only look to take those high probability setups as we enter a new month with new opportunities. I'm not suggesting that you don't trade, but we can enter like a state of overconfidence when we've had a really good month. So just keep control of those emotions and try and remain as humble as possible. So of course, we had NFP today, which came out slightly better than expected. However, any short-term strength was quickly dissolved following from weaker US PMIs, therefore indicating further contraction. So we saw that further USD weakness. And as you can see here on the DXY chart, we've just seen continued selling all week. So it'll be really interesting to see whether or not we actually take out this previous low here or whether we create this double bottom scenario. So in this video, I thought I'd recap some of the positions myself and the community have taken. We'll also be having a look at some opportunities for November. For me, there's been 3 standout trades this week, which have been Dollar Swissy, CAD Yen, and Aussie CAD, which I'll cover in this video. So it's Friday afternoon, and of course it's a new month, so there's no need to take any new positions this close to the weekend. If you're in positions, obviously manage them accordingly, but there's no need to rush into any new trades just before the weekend. So we'll take a look at some setups. We'll obviously cover some of the trades that we've taken. And as I've already said in this video, go and check the monthly candles. Just see if you can gauge any information from the way that they've closed, any candlestick formations. And it's always a good thing just to get into the habit of checking the monthly candles at the start of a new month. So back to the DXY. Let's see how the DXY closes. As you can see, we've had a very bearish week following from this retracement. And I just want to see whether or not we take out this previous low. Now, if we close below this level here, then I think that's going to be a good indication that there's going to be continued weakness for the DXY. And of course, we can then translate that across to Euro USD. So let's have a look at Euro USD. So obviously, when we look at Euro USD, we can see the inverse correlation here. We had this impulse higher, creating a new high. We had this retracement, and now we've seen 5 days of buying. Now, there was an opportunity to take this long, as I highlighted last week, and that was basically off the back of a retest of this level of structure, the 61.8%, and the daily 50 EMA as well. So there was multiple confluences here to take a long trade. We knew from the higher timeframes what our directional bias was, as price had printed a new high. And as we approach this level here, we need to see whether or not we print a new high or we create a double top, very similar to the DXY. Now, we should only be looking for reasons to buy this currency pair at the moment due to our understanding of the higher timeframes. And we just need to wait for price to enter an area of value in order to give us that highest probability trade setup. So if we look at the weekly, now you can see that I've got this longer term fib in play from A into B into C, and we're nicely rejecting out of the fib reversal zone. Now, of course, that's also giving us some added confirmation that this could just be a new high low forming on the weekly time frame. And if we have a look at the fib that we had in place, the minus 27% lines up nicely with the weekly 50 EMA as well as a nice upside confluence. And if we just go back to the daily, again, you can see if we look left, we've got this level of market structure, which lines up with a minus 27% as well as an upside target. You can see that this is quite a large area of liquidity, and I would expect if we continue to see this upside momentum that we would hit the minus 27% around 1.1230. So keep this on your watch list. As I say, we do need to wait for price to enter an area of value. At the moment, there's no real trade setup for me. And now that leads me to US dollar Swissy. So following from this impulse, we had this steep correction into the golden pocket fib reversal zone, and then we started to see these candles of indecision, that deceleration and price action. And if you're a part of the community, you'll know that we were all looking at the setup following from last week's analysis. We were waiting for price to enter that area of high value, which it did. We saw the intraday timeframes breaking down lovely. And then there were two entries presented. There was a more aggressive entry, which myself and a few others took. And there was also a lower risk entry, which was upon the break and retest of the trend line and the 1 hour 50 EMA, which I know that most of you caught. So well done to those that got involved in this trade. Now, you can see that we're still moving nicely to the downside. We had this lovely bearish engulfing closing below the daily 50 EMA. And like Euro USD, I'm looking for the continuation. I'm obviously looking for this to continue to the downside and take out this previous low here, and to see whether or not we can fulfill this fib and hit the minus 27% and possibly even lower. But like Euro USD, I don't really see a valid trade setup at the moment. I really want to see how this daily candle closes. If it closes anything like the way it is at the moment, then that's going to be quite indicative moving into next week about the potential momentum that's going to continue for this currency pair. So I've still got this on my watch list. I'm still holding position, and I'm still looking for reasons to sell this currency pair. So Aussie US dollar moving nicely to the upside, as you can see. Now we've now printed a new high and we've tapped the minus 27%. Now, not only have we tapped the minus 27%, if we had taken a fib from this high to this low, you can see that aligns perfectly to the 61.8% as well. And of course, if we look left, we've also got this structure point. So this all makes sense. Now, of course, I would be expecting some form of a reaction from this point. And if we do see a pullback, then I'll only be looking for reasons to buy this. On the basis that we've now printed a new high, we've taken out this high here, but more importantly, we've now invalidated this bearish structure because this was the last swing point in my opinion. We failed to make a new low, we had multiple rejections off this key level here, and we've simply impulsed higher, printing a new higher high. So therefore, we should only be looking for reasons to buy this. Now, of course, if you're a little bit more aggressive and you can find a reason to sell this, then you can implement the reversal strategy, which most of you will know, and you can look to capitalize on that retracement. So there's nothing wrong with that. Of course, it comes at a higher risk because you're going against the trend. But looking at the bigger picture, I think there's a lot of upside potential for this currency pair. So we have a similar situation with Kiwi dollar. Now, Kiwi dollar, again, failed to make a new low. We had this nice accumulation at the bottom here, almost giving us this inverse head and shoulders, impulse higher, retracement, another impulse higher. Now, if we just have a look at this level here, you can see that we're failing to break above this level. Now, we haven't hit the minus 27% yet, so I think there's still room to the upside, but we really do need to clear out this level. So if we can get a full body candle closure above this level, that will be a nice confirmation that this could continue pushing higher to the minus 27%, where we may see some form of a reaction. That would have then invalidated the bearish sequence, printing a new high, and then like Aussie US dollar, we can look at the bigger picture and we can say to ourselves, right, there's a lot of upside potential here. We should only be looking for reasons to buy this currency pair, unless of course you want to take advantage of a retracement, which, as I say, there's nothing wrong with that. But if we get that full body candle closure above this level, then I think that'll be that nice confirmation that this is going to continue pushing higher. So again, following from last week's video, I was highlighting this area here, which was around the daily 50, the 50% fib, and this level of structure. And price retraced into this level. You can see that we had this deceleration in price action, multiple wicks to the downside. And then if you had a look on the 4 hour, for example, you would have seen that this is actually a double bottom. And there was an opportunity to take this long. So well done to those that took advantage of that move. Now, similar to Aussie dollar, there's no trade setup at the moment, but let's just monitor how this daily candle closes and then look for reasons to either sell upon a retracement or buy as a longer term perspective. So this is Aussie CAD. Now, this was one of the trades of the month and played out beautifully. Now, if we just cover what happened here. So we could see that price was in a bearish downtrend, making lower lows, lower highs. We reached this level here around 0.8900, and we could see that price started to stall. We noticed these long wick rejections. Price had this one last drive lower, followed by a push higher, and it failed to make a new low. Now at that point there, we could then fib this. So we had a fib from A into B, waiting for that retracement into C, which we got, if we look left, we saw this level of liquidity and market structure where price had previously rejected around a key psychological level. And if you zoom out, you can see that we were very, very low in the chart. So an area of high value, always worth the risk buying at these levels upon the confirmation, of course. And if we drop down to the 4-hour time frame, you can see here that discreetly price was making higher lows. Now, upon the second higher low formation, that enabled us to draw a trend line like so. And you can see here that price retraced into the trend line and the 78.6%, multiple rejections of the 78.6% and this level of structure. And then if we drop down to the hourly, now as you can see, we had a double bottom formed, and I took an entry on the closure of this 1-hour hammer, and I removed some profit when price hit the minus 27%, which is here. And then I also banked the rest of my profit when price hit the minus 61.8% and this key level that I have marked out, which is around 0.9100. So that was a fantastic trade, banking over 5%. Now, I actually had quite a large stop loss for this trade just because I wanted to give it some room to breathe. But you could have gone in with a tighter stop just because of where the 78.6 was placed. And we know that if price broke the 78.6%, then this fib is simply invalid and there is a higher probability that price is going to continue to the downside. So you could have had a tighter stop, something like 25 pips or even 20 pips. And of course, then your risk reward increases greatly. But I was very happy with the risk reward. I was comfortable with a 35 pip stop loss just to give it that room to breathe. And I banked around 187 pips on this trade. So that was fantastic. Now, going into next week, as you can see, we've hit our last and final Fibonacci extension and also this key level. So I'm expecting some form of a retracement. We had this spinning top candle yesterday on the daily time frame. I am expecting some form of a retracement, and I'll be looking for reasons to continue buying this upon a retracement. But of course, if you're an aggressive trader, then you can look to sell this on the retracement. So Euro Aussie, I'm still actually holding a position on this currency pair. We had this head and shoulders formation with the right shoulder developing nicely following from this correction. We've now broken below this structure, the trend line and the daily 50 EMA, and I am expecting a continuation lower. So where does price go from here? Well, if you drop down to the lower time frames and wait for any form of retracements back to either the daily 50, some level of structure, or a Fibonacci level, then personally, I'll be looking for reasons to continue selling this. And our first target should be the neckline of this head and shoulders pattern, which is around 1.5900. Now, of course, in any pattern play scenario, we can look for the duplication. So if we duplicate this from the head to the neck, and then we duplicate that, then we can see that the duplication basically taps 1.500 psychological level. So that could be a really nice longer term downside target for this pair. But of course, we do have multiple barriers in the way before we arrive, if we arrive at that downside target. But for me, I'm waiting for this right shoulder to completely form. I'm looking for reasons to sell this. If we get any form of minor correction on the lower time frames, then you can find any reason to sell this down to the neckline. Again, if we break the neckline, that will then give us that confirmation on the higher time frames that a new low has been printed. That gives us that added confirmation of new direction, and then we can just look for continued reasons to sell this upon that confirmation. So let's take a look at Euro New Zealand dollar. So this pair has been really good to us over the last couple of weeks. We took a very aggressive entry at the top of the structure here with our stops just above. We then capitalized on the 300 pip move all the way down to this structure point. We then had this retracement, which was expected, and then it was simply a matter of identifying areas of value. Now, if we just drop down to the 4-hour time frame, I'll explain the setup that we've just taken. So as we had identified that price has stopped and was starting to reverse, we could then fib this new leg from A into B, and we were simply waiting for this correction to tell us that it was finishing. So we had this level of structure from here, and that was also in alignment with the 50% fib. We could see that price was really struggling to break this level. Now again, this was quite an aggressive trade on the basis that the higher timeframes hadn't confirmed that this was in a bearish downtrend, as we hadn't printed a new low yet. But if we look at the pattern identification here, you can see that we have a head and shoulders, the left shoulder, the head, and the right shoulder. So this was giving us that confirmation that there could be a nice reversal in play. Now, as you can see here, this was holding out very nicely on the 4-hour time frame, and we had wicks rejecting this level. And again, if you're a part of the community, you'll understand exactly how and why we took this trade. Now, our downside target was psychological level 1.7300, and we took an entry around 1.7485, around there, and we had our stops 50 pips above, like so, and we were targeting 1.7300, like so. So that was a nice 3.6% trade. We went in with a slightly larger stop loss just to give it that room to breathe, and we wanted it tucked above the structure and the 50% fib, and that hit our profit target earlier on this afternoon, banking us a nice 185 pips. So again, that was a really nice trade. So we've almost banked 500 pips from this currency pair in the last 2 weeks, and I'll be looking for reasons to continue selling this currency pair, but I just want to see how that daily candle closes. Now, if we just go back to the daily, as you can see, we've still got some room to the minus 27% to fulfill this fib, and I really want to see how this daily candle closes. Now, as you can see, if we look left, we haven't had a full body candle closure below 1.73300 in almost 2 months. So it's looking likely that we'll close below the daily 50 EMA, so that's good. But if we have a full body candle closure below this level of structure, which is acting as a neckline for this head and shoulders pattern, then that would be a really nice confirmation that this is going to continue lower. Now, there's no need to rush into this. I think there's plenty of room to the downside. And again, if we duplicate that, then we can look for our downside target. So keep an eye on how this daily candle closes. For me, I'll only be looking for reasons to sell this, and I'd recommend definitely having this one on the watch list for November. So GBP AUD, very corrective at the moment. Hasn't really been a trade setup for me personally. I've always been more interested in seeing whether or not we can retrace deep enough into 1.8500, where we have the daily 50, the 61.8%, and this level of structure, and of course, psychological level. So multiple confluences there for us to take a position. But if we break this, then we could actually fall deeper into the fib pocket and potentially retest this trend line. But given how impulsive this move is, I'm actually not expecting that. So I just want to see how price reacts around the 50%. If we break that, I'll be looking at the 61.8% and then looking for reasons to buy this, of course, if I get that confirmation. GJ, again, very corrective, following from this impulsive move. I just want to see how deep we correct here, because we're kind of forming this flag, and I don't want to get caught on the wrong side of the market here and be buying at these levels. I'd rather wait for that deeper retracement. The first level that I have marked out, as you can see, is the 50%, which is in alignment with the daily 50, structure point, and psychological level 136. So that's the first level of major interest for me. And of course, if we retrace deeper than that, we'll just be in the golden pocket and a potential third touch of this trend line. So personally, I'm looking at both of those scenarios. I do really want to buy this pair, but I just want to see whether or not we correct a little bit deeper, because of course that's just going to improve our risk reward. Now let's have a look at Euro JPY. So Euro JPY, quite similar to GJ. Now again, I'm just waiting to see whether or not we retrace a little bit deeper to the 38.2%, which I covered in last week's video, which is the structure point and will be the daily 50 EMA as well. So that's the first area of interest for me. We can see that 123.5 is holding quite nicely. So there's actually a nice level of intraday support there. And we're effectively range bound. So I just want to see price break the range. Now, there's two ways to look at this. If we break the upside range, then we look to enter upon a retest at this level. If we break the downside range, it does look like we're going to retrace deeper, and then we can mark out some levels. So as I say, the first level for me is a 38.2, which is around 119.85. And if we retrace a little bit deeper, then I'll be looking how we react around the 50% or the 61.8%. So on the watch list, it definitely needs some development. I'm still looking for reasons to buy this, but I just need to see a little bit more price action here. So another yen pair is US dollar JPY. And as you can see, 109 is being well respected. We have failed to break above this level yet again. And as you can see, we've really struggled around this level back in July. Now, price did in fact break above this high here, confirming that there was a bullish sequence, high highs, high lows. And we've now since reversed. We had this very nice bearish candle, very impulsive candle printed yesterday, straight into the daily 50 trend line and the 50% fib. Now, we've currently rejected that. but due to the impulsive nature of this candle, I am expecting a deeper retracement. Now, I'm looking at this one of two ways. We either respect this level and we basically pop higher from here, or we break the daily 50, break the trend line, come into the fib pocket and possibly reverse from here. Or in fact, we could actually come a little bit deeper, then have a retracement, create a head and shoulders formation, and then continue to the downside. Now, that would make sense with our forecasts on the DXY and the US dollar in general with that further weakness. But of course, I am anticipating a weaker Japanese yen. So I'm expecting further upside on Euro JPY, and I'm expecting further upside on pound yen as well. So in theory, this might not be the best of all pairs to be paying attention to. That's just my opinion. But if we just look at the pattern development here, you can see that we are getting squeezed, and it is looking likely that we could break this trend line. So I'm not massively keen on this currency pair at the moment. I just wanted to cover it because it was a pair that I covered last week. I'm going to be sitting on my hands with this one for a minute and just to see how we develop. But I'll let you guys know as soon as there's a trade setup available. But it's just nice to see how well respected these technicals are, the 50%, the daily 50, and the trend line. So let's just see whether or not this holds, or in fact, actually this level breaks, and then we just continue seeing that downside from here. So the last currency pair that I'm going to cover is CAD yen. And CAD yen was a reversal trade that myself and a lot of the community took, which was a very nice trade indeed. Now, from the higher timeframes perspective, we knew that the price was in a bullish uptrend, but we were looking to capitalize on the retracement using the reversal strategy. And as you can see, when price got down to the level of 80, the psychological level here, which in fact was a fib level, which we covered last week, price then broke above this previous high here, confirming that this was a higher low, and confirming that in fact actually now this is a bullish sequence, higher highs, higher lows. So if we fib the previous leg from A into B into C into D, once price had hit the minus 27%, we were expecting some form of a reaction. Now, as you can see, price did pop a little bit higher, 30-40 pips higher, and we were still looking for reasons to sell this. Due to the corrective nature of this price action, when we see an ascending channel like this, there is a high probability of a reversal. Now, of course, from our higher time frame analysis, we knew that we had already tapped the minus 27%, and we could see this starting to roll over with the intraday timeframes breaking down lovely. So for those of you that are involved in the community, you'll know how we capitalized on this trade. And yesterday we had a gross profit of around 127 pips, which is fantastic. And we're still running this trade. Now, the reason we're still running this trade is because we just want to see how price reacts around the 50% fib and this level of structure. And if we break that, then we'll be monitoring price around the 61.8% and this trend line as well. So I still think there's some further downside, but for the longer term, I will be looking for reasons to buy this as soon as we get that deceleration in price action and that confirmation that price is going to start reversing from here. And again, if you're involved in the community, you'll know how to capitalize on the next move. So just to round the video off, we obviously had a fantastic October. And as you can see, the technicals had been playing out beautifully. There's still lots of opportunities for November, and we just need to be patient and wait for price to interact with those high value areas. It's obviously clear that you can still make money in both directions, whether you're buying the continuation or you're selling the retracement. You can still make money in these markets. Now, if you didn't have a good October and you're thinking to yourself, why didn't I have a good October? We're all looking at the same information. We're all looking at the same charts. Everyone sees things differently. And of course, it all goes back to the mindset that you have when trading. Now, if you have had a bad month, always look to get as much down in your journal as possible and try to identify any repeated mistakes. And equally, if you've had a really good month, there's no reason why you shouldn't be journaling either, just to see if there are any 1% tweaks that you could have made. And more importantly, as I've already said in this video, now is the time not to jump into the next month with too much confidence and almost that cocky attitude, which we've all had. I definitely have. And just remain humble. No need to give back any money. Wait for those high probability setups. I've covered some opportunities in this video, and there's definitely some big moves pending still. So I hope you found this video helpful. And if you've got any questions, drop me a DM or a message. And I hope you guys have a fantastic weekend, and I'll catch up with you all soon.